Well, hello and welcome to our Stocks to Watch series from Global One Media, bringing you news from leaders of companies around the world to help you make informed investment decisions. I am Munir Barazi, your business analyst and host, and today I am joined by Richard Young, the president and CEO of Argonaut Gold, a mineral development company that is overseeing producing mines and highly prospective projects in the US, Mexico, and Canada. The company is listed on the Toronto Stock Exchange as AR. Hello, Richard. Thank you so much for taking the time to join us today.
Well, thank you for having me.
It's a pleasure. So, for our viewers who are not familiar with the company, tell us a bit more about the story behind Argonaut Gold and its current mission and vision today.
Absolutely. So Argonaut IPO'd, initial public offering in 2009. It built a number of heap leach operations in Mexico, and that was really the backbone of this company for the last 15 years. But in 2013, they bought an exploration property called Magino in Ontario, and in 2020, they bought an operating mine in Nevada called Florida Canyon. And it was all part of a strategy by the board to diversify operationally and geopolitically. So we're now in, as you mentioned, Mexico, Canada, and the US. In terms of our vision has become a low-cost, mid-tier North American gold producer that generates significant value for stakeholders while proudly demonstrating responsible mining. In terms of our mission's pretty simple. It's to deliver asset growth and operational excellence while protecting our people and the environment and working closely with our communities.
Very encouraging indeed. And I'll get to ask you about the Magino mine in a bit. If you can tell me a bit more about your current projects. You have an objective of becoming a low-cost, mid-tier gold producer, and you already have producing mines. Can you tell us a bit about your current mines as well as the high-potential projects you're leading?
Well, so as I mentioned earlier, Mexico's been really the cornerstone, the backbone of this company, but those mines are higher cost now, they're more mature. Our focus will be on Magino, which is our newest mine. We've just completed that this quarter, as well as Florida Canyon in Nevada. Those two operations we've just begun as of August 1st, drill programs. And we believe that those drill programs will both expand resources and reserves and will ultimately lead to expansion of our mill facilities, which means down the road, higher production and higher cash flows from those two principal assets. Mexico's been very good to the company, its shareholders over time, but given the current nature of the operations, don't really fit with our long-term plan.
And you mentioned earlier that you focus a lot on managing those projects responsibly and offering a lot of value to different stakeholders. Would you like to tell us more about that?
Well, in my prior life, our company put together a long-term plan. And as we executed on that plan, we were in the TSX 30, which is being one of the 30 best performing stocks on the TSX over a 3-year period. We were number 8. And then you extend that a 4th year before the sale, we were 8th again. And we believe we've got the same opportunity here at Argonaut. And Magino and Florida Canyon and the blue sky plans that we have for both of those mines are the foundation of that.
That's really a remarkable performance. So let's talk a bit more about the Magino Gold mine. You've recently opened this mine in northern Ontario. How much will that mine produce, and is there a chance for expansion?
So we've just commissioned the mine. We'll produce between 70 and 80,000 ounces this year, but next year we should be about 150,000 ounces. That's our base plan. As I mentioned, we've already begun a drill program. We've got over 5 million ounces in resources within the pit. About half of that is reserves. We believe through this infill drill program that we will be able to increase reserves by somewhere between 1 million and 2 million ounces over time. And the current mine life is already 19 years. So we are moving forward this month with engineering work for an expansion to something between 17,500 and 20,000 tons per day. At 20,000 tons per day, it's about double the current nameplate capacity. So we believe with a larger reserve base, a mill expansion, we could be producing somewhere around 250,000 ounces of gold per year from Magino. It's got a low cost base, so it would make it one of the 10 largest and lowest cost gold mines in the country. And really the only company mine in that list that's not owned by Barrick, Newmont, or Agnico, which are the 3 large cap gold companies here in North America. So it's a unique opportunity to own one of the top gold mines in the country that's not owned by a large cap.
It is really an impressive opportunity, and the capacity of the mine is also remarkable. You've recently assigned a new VP of exploration. Tell us more about the new executive and what he or she brings to the table and the new direction that you expect in your exploration operations.
Well, Brian Arkell, who was our VP exploration, retired, and he is credited with really developing Magino to over a 5 million ounce resource today. But a big focus of our attention is Florida Canyon. Florida Canyon is a low-grade heap leach operation, and it's located in Nevada. And underneath all of these low-grade heap leach oxide operations are sulfides, and we've got them. And we believe that there's an opportunity to drill those sulfides. We're calling it a proof of concept program, and really create a larger mine. Owen Nichols has done that twice. In the US, he's done that at Castle Mountain and at Mesquite. And so he's got a unique skill set that we can leverage at Florida Canyon. So we're excited by his hire and the value that he can create at Florida Canyon. Today, there's no value in our stock for Florida Canyon. So his efforts over the next 2 years should show a pathway to a much larger project than the mine that we currently have today.
Sounds very promising. Let's talk a bit about the financial side of Argonaut Gold. You've recently released your financial statements for the second quarter of 2023. Can you tell us about the highlights?
The highlights were that, production was higher, costs were lower. We finished the second quarter with over $70 million in cash, and we're talking US dollars, and we still have 20 million undrawn under our debt facility, and our Magino mine is built. So we ended the quarter in a good place. And now as we move into the second half of the year, we expect production to rise with Magino now commissioned, and cost to decline because it is our lowest cost operation.
Very good. And my last question, what excites you the most about leading Argonaut Gold, and why should investors be as excited?
I think what excites me is the opportunity to be part of a company that has the potential to be a TSX top 30 over the next 3 to 5 years. As you look at commissioning of Magino, which will be a big catalyst when we announce that we've commissioned the mill, hit commercial production, we're going to see higher production second half of the year. The proof of concept program at Florida Canyon, where we drill and show the potential for the sulfides below the oxides. And then by the end of the first quarter of next year, we'll put out updated technical reports for our two principal mines, Magino and Florida Canyon. And what they will show is the value today, but as well, the pathway forward to value creation. And we believe that the combination of those two mines should allow us to join the TSX 30.
Well, I'm sure investors will pay close attention to those very promising developments. Richard Young, the president and CEO of Argonaut Gold, thank you so much for joining us today and for sharing those updates. We look forward to seeing you again soon.
Thank you very much.